Let's face it, most traders struggle with one thing: when to enter a stock. They wait too long or they jump in too early and miss the best part of the move. In this video, I'm going to show you exactly how I spot the perfect entry point in any stock using my one good trend, 1GT strategy. The same approach I've used for years to help me and my clients catch explosive trends with confidence. You'll learn the 3 ingredients I look for before actually pulling the trigger. And by the end of this video, you'll know how to apply these to your own trading, step by step. Let's go. First, let's redefine what exactly is a perfect entry. What does perfect entry actually means? Well, it's not about buying at the lowest or cheapest price. It is about entering when the trend of the stock is strong, right? The risk is manageable and the momentum is on our side. So we want to only get in on stocks that are showing signs of a reversal, right, from down to up if you're looking at buying, or a stock that is already strong, right? Rather than buying stocks which are weak, which are going down, which are getting cheaper and pulling lower every day. We don't want to think about buying stocks like that. That is essentially doing what we call catching a fallen knife, right? So we don't want to catch fallen knives that is going down and down. We want to wait for the confirmation to know when to get in to ride the reversal, or a stock that is already making higher highs and higher lows, or we call it an uptrend. This mindset shift alone can improve your results. So let's dive into what exactly is my one good trend strategy about, right? In very simple terms, step by step. So first thing first, we want to take trades that are along with the trend, right? And when we talk about trend, we kind of like break it out into 2 components, right? One of it will be the longer term trend, whereby it must be at least in the same direction as a longer term trend, whereby over the past 6 months to a year or maybe more than a year, it is in an uptrend, right? So let's take a look at this stock right over here called Broadcom, AVGO. So how do we know if a stock is in a longer term uptrend? Well, very simple. We can also just look at the lows of this stock. Look at this, right? So over the past 1-2 years, we have been forming what we call higher lows in general, whereby each time it goes higher, it pull back down. The lows were actually higher than the previous low. So this stock would be what we call in a longer term uptrend just by looking at the lows over the past 1 to 2 years. And one of the things that we can do very easily is that we can pull out, right, the longer term moving averages. So very simple. I use what we call the 100 days simple moving average and the 200 days simple moving average. So you can see that I have this feature as part of this indicator that I call the One Good Trend Pro indicator. So just turn it on and you can see 2 lines over on this stock Broadcom. The red line will be the 100 days moving average and the blue line will be the 200 days moving average. So how do we know if the longer term trend is up? Well, quite clearly, right? The red line has been pointing up since more than a year back. The blue line has been pointing up as well. So I would say general long-term uptrend, right? And one thing we want to note is that we want the red line to be above the blue line, all right, while both of them are pointing up. So that would be when we are at least in the same direction as the longer term trend. And now what we can do is that we also want to be in the same direction as not just the longer term trend, but also the short term trend, because in the longer term, right, it can be up, but while it is in a longer term uptrend, the short term, right, for a week, for 2 weeks, for a month, for 2 months, it could be down. So we don't want to enter when the short term trend is down. We want to wait, right, for the short term trend to also turn back up, and that is where you have a higher odds of winning, right? So let's take a look at what does that mean. Well, very simple. From this 1GT Pro indicator that I have, you can see very quickly I can turn on the smaller, I would say, period of the moving average, and that will be 20 days moving average turned on, and there we go. And you can see right now there will be a green line over here. So you see that the green line doesn't just goes up every time, right? It can be moving down as well. You can see right over here in December 2024, so the push up, and January, February 2025, it starts going down, 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 and it starts going all the way up again, right? And right now it is still kind of like pointing up. Does it make sense? So this green 20 days moving average line kind of give us a bit of a guide in terms of the short-term trend. So as I say, right, we want to wait for both the longer-term trend to be up and the short-term trend to be up, right? And you can see, as I mentioned, for this stock Broadcom, well, the longer-term trend has been up since like 1-2 years back. So that is settled, that's done, right? But what about the short-term trend? Should we actually think about getting in over here at this point in time, as the green line was going down, down, and down for not 1 month, not 2 months, but like 3 months? Should we do that? No, you probably don't want to do that, because if you do that, well, you'll be pretty much buying at 250, 240, 220, and it goes all the way down to 160. Does it make sense? So we only want to wait for the green line, the 20 days moving average, to turn back up or show some signs of a reversal, or maybe just flatten out, all right, and stop pointing down. Does it make sense? All right, and that is when that happens, well, the longer term trend has been up all the while, and now finally the short-term trend has turned up. Same thing over here as well. You can see, right, the green line was pointing down, down, down. Just be patient, wait for it to turn up. Right over here, pump. There we go. All right, and that's where you start to see that reversal all the way up. So when both the long-term trend is up and the short-term trend is up, it's a very high probability trade. And what now we can do is that, from this one good trend strategy, I have this indicator right over here, and in a matter of seconds, for any stocks, we can turn it on and we see if there are any bullish or bearish signals, and that would add on as another confirmation. So let me just show you what I mean. Right over here, right, I can just turn on buy and sell signals, right? Any asset classes, whether is it the Broadcom, US stock, Singapore stock, even the markets, right? Turn it on, you get an opinion in seconds, right? Let's turn it on. 1, 2, 3. There we go, right? So now, right over here, you could see that, well, when we actually saw the short-term trend turn up, well, a week before that, we actually got a 1GT bullish signal coming out, right? And that would be kind of like a little bit of a confirmation whereby, we actually attempted to break what we call a resistance, all right? A trailing resistance, whereby, if we do go above a certain price level, there could be some strength coming back. So that could be one confirmation. And finally, when the green line started to turn up, there we go. We pretty much have 3 confirmations, right, happening. And that's where we started to push all the way up, right? Looking at the gains, it would be about 71% gain in about 3 months. Same thing over here, right? We got 2 bullish signals coming out, right? The long-term trend was up, short-term trend just started to turn up, well, we got another bullish signal, and there we go, right? So this kind of like, indicator guides us on not just about getting in, but also to know when to get out. So we talk about, one of the struggles most people have will be to know when to buy, right? The perfect entry, right? So you could have the perfect entry, but if you don't know when to get out, right? Don't even talk about perfect exit, but just a normal exit, right? If you don't even know how to do that, well, that's where your gains could be wiped out, all right? And from gains from profits, it could be losses, right? Let me show you what it means. You can see right over here, well, we get what we call bearish signals coming out, and the short-term trend started to turn down. Look at the green line started to turn down, right? That's where you want to think about getting out. You don't want to hold it all the way back down, right? Even though the longer-term trend was still up, but the short-term trend has turned down, plus we got bearish signals. So that's where you want to take this opportunity to get out, right? Don't want to be greedy, reduce some exposure, and maybe wait to think about when to get back in again when you see that confirmation that I talk about in terms of, a bullish signals, in terms of the short-term trend turning back up. So there are 2 types of entries that you could take, right? One would be a more aggressive kind of entry whereby, it breaks what we call a resistance level, it starts pushing higher. You could take a more aggressive entry whereby there could be a lot of upside momentum as well, all right? Another type of entry will be one whereby it's more conservative, right? So for example, if we break out and we are holding above a new higher support level, and it does dip a little bit to that support level, right? That's where you could time your entry to kind of get in on dips near the support level for a potential rebound. Less aggressive, slightly more attractive prices, higher reward to risk ratio as well. So 2 different type of entries. You want to know which is which, right? So let's take a look at some live case studies. So this is UNS, one of the Singapore stocks that we caught for since a couple of months back, and very quickly you can see that I've turned on the moving averages, right? So you can see that for UNS, right, the longer term trend was actually down, right, since like 2024, just by looking at the red and blue line. You see, right, red going down, blue going down. So for most part of 2024, we were actually in a longer term downtrend. But however, somewhere around like April, March 2025, but finally, right, the red 100 days moving average went above the blue line. So red above the blue, and then both the red and blue started to turn up. So that's where there are signs of the longer term trend starting to reverse. So that's where you want to put this stock in your watch list, right? And of course, the short-term trend, just by looking at the green line, you can see, right, it was pretty much flat for most part of 2024, went down a little bit, and we saw a very good reversal right over here in May 2025. So that could be good confirmations that we are indeed seeing a reversal. And one thing is that you can see that we have broken a very key resistance. As I mentioned, right, when we were to break a very key, what I call resistance level, that would be a more aggressive kind of entry. So you see, right, since $1.10, right, has been a very key resistance that we've been trading below for about 8 to 10 months. Came down, we're below it, touched, came down, but finally over here in May, we broke above the $1.10 psychological resistance level. So that could be a more aggressive kind of entry, right, as it held above the new support level. And of course, the green 20 days moving average line started to point up and went up even higher. So what I could do right now is to turn on the bullish and bearish signals to see if there were actually any other confirmations coming out. So let's turn it on. And yeah, true enough, right over here, right, you can see that we have not one, but we have two 1GT bullish signals coming out. Right over here, you can see over here, the second bullish signal came out as we actually attempted to break the $1.10 resistance. So as I say, that would be a more aggressive kind of entry, We break a resistance, we held above this new resistance turn support and eventually consolidate and start pushing higher. So even though prices is slightly more expensive than a week back or a month back over here, right? Well, there could still be a lot of upside momentum as long as the new support holds. So in this case, you see that after the bullish signal, after holding above this support, well, prices really started to rally, right? So from this bullish signal all the way up to now, 37% gain in just about 2 to 3 months. So that's how you take a more aggressive entry, right? As another confirmation if it were to break above a very key psychological resistance level, right? For a couple of months, it has been touching and going down, but finally it broke above it, it stayed above it, right? That is where we could see a lot of upside momentum, right? And that could be a confirmation, especially if the longer term trend is already up and the short term trend is already up also. So let's move on as to how one could take a more conservative kind of an entry, right? Less aggressive. We don't really just enter on a breakout, right? We want to wait for dips to near some of those key support levels before actually entering. So let's take a look at this case study right over here called Food Empire, one of the Singapore stocks that we like. We covered it since a couple of months back, right? And it started to push even higher. So you can see, right, when we had this confirmation coming out in terms of the first 1GT bullish signal, that was in like April, right? Well, the longer term trend was already up. So when we got this bullish signal, well, it was good, right? It could be a good indication that prices are starting to hit even higher, especially if the short term trend started to turn up. So you can see the green line, when we had this bullish signal coming out, the green line was actually kind of like flat, right? It was moving sideways, consolidating. But after the bullish signal, well, we started to see signs of the green line actually sloping up. So that could be signs of uptrend in the making, right? It trying to attempt to push even higher, right? So how do we then think about getting in on dips, right? Based on this bullish signal. So as it start to push higher, you can see that we would have found a higher support level. So right over here, let me show you what I mean, right? We could actually draw what we call a horizontal support level. So it will be like maybe around the $1.40 as it pushes higher, it consolidates above the 140, and maybe over here as well, we could draw another support level around $1.70 as it pushes higher and it starts consolidating above this support level. So each time it moves higher, it starts to consolidate sideways, right? It goes down, rebound, goes down, rebound. That's what we call a support level, but you could think about getting in on dips, right, whereby there's a higher reward, and especially if we do see some bullish reversal candlestick patterns right over there, right? Same thing over here, we started to push and break what we call a resistance level as well. All right, I think we started to push even higher, right? And now I would say that the support would probably be around $2.30. You see some buying pressure is coming back around $2.30. So we're going to try to enter on dips near these support levels as it moves even higher. So that's what we call a horizontal support that goes higher in an uptrend. And very quickly, we could also do what we call a trailing support. So one of the very powerful features for my One Good Trend Pro indicator is that with a click of a button, I can turn on the trailing support line right over here. So when we got this first bullish signal, well, a trailing support has popped out. So this trailing support kind of like, follows, as the name sounds, like trailing. It follows the stock as it moves higher, but it doesn't follow too closely. It gives it some space to breathe as well. But as long as you stay above the green upward sloping or upward moving trailing support line, we are good to go. So if we were to dip to near this trailing support, like over here as well, it nears the trailing support over here as well, and of course we do see some bullish reversal candlestick near there. Well, that could be a good entry as well to think about getting in on dips, more conservative kind of entry, right, to ride the uptrend even further. And what we could do, right, whether is it an aggressive entry or a conservative entry near a support, is that we want to take steps to manage our risks or to protect our profits. And how we could do it is that simply based on this trailing support line, we could have a stop loss. Like for example, let's say you have got in over here when we got the first 1GT bullish signal, maybe around the 142 or 143, right? Of course, it has gone up from here all the way to here about 69% in about 3 months, right? So the question is that should we sell? Should we get out? How should we protect our 69.5% profits, right? While hopefully allowing it to move even higher. Well, what we could do is that we could have a plan to get out if it were to dip below this trailing support level. So remember, I talked about this trailing support that's popped out over here when it was around $1.21. Now the trailing support is no longer 121 because it has followed it and go up, right? So now the trailing support is no longer 121, it's at $2.15, right? So we could have a plan to get out if the price were to go below the trailing support, because as I said, this trailing support, it accounts for volatility of the stock, right? If you're above it, you're fine, you're safe, chill, all right? But if you go below it, you want to be careful because we give it the space to be above and you use up all the space and you break below it, you might want to be careful. There could be some heavy selling coming back. So that's where you could have a plan, right? To put your stop loss below this trailing support just to protect your profits while allowing the stock to ride even higher, all right? And of course, if the stock moves even higher, great. That's why you could shift your stop loss even higher and follow the trailing support that is moving up as well. So that's it, guys. I hope that I've given you a quick run through of the entire 1GT strategies. So the key here is that you don't aim to buy at the bottom, right? You want to aim to buy the breakout into strength, right? Or the bounce of those support levels that I talk about, right? Along with the trend, of course, with bullish signals coming out as a confirmation, and this is where there's a higher odds of winning. So there we have it, guys. This is pretty much the entire one good trend strategy very quickly. So if you want to find a little bit more in terms of the 1GT Pro indicator as to how we can turn it on any asset classes, any stocks in seconds, well, what you could do is to attend on those free webinars. The link is right below the video. Click on it, register for a free webinar. That's where I'll share you guys a little bit more about the entire strategy. And not only that, right, as to how do we actually filter out the top 1% of stocks first, right, before we even think about getting in on that. Does it make sense? Because you can just turn on, the bullish and bearish signals on any stocks, but the question is that, is that stock even the top 1% to think about buying, right? If not, then why should we want to buy that stock, right? So that's what we'll share, all right, in this free webinar. So if you find out more, attend a free webinar. The link is right below the video. And of course, subscribe to my channel as well if you have not yet done so. Joby here. Thank you so much for watching. I'll see you in the next video. Take care.